Hello, everyone. Welcome back to Zer0es TV and another episode of The Short of It. I'm joined today by Carson Block and Freddy Brick of Muddy Waters Capital and Dan David of Wolfpack Research. Thank you all for being here today.
Good to be here.
Thanks, Max. Great to be here.
Yeah, thanks for having me.
All right, Freddy. So I know you wanted to talk about something that Cathie Wood just can't get enough of, and that's buying the dip after short sellers go after some of her favorite holdings. The one that comes to mind right now is DNA, which we actually had a chopping block about last week. It moved down sharply, and she stepped right in to buy the dip. But this isn't the first time that she's done this. Where else has she been buying the dip, and why does this seem to be her go-to strategy?
Yeah, so I think the first time that we became aware of this kind of dip buying propensity from her was around Workhorse. I think it was after the Hindenburg or the Fuzzy Panda report. Obviously, with her daily filings, it's closely watched the names that she's very fond of across all of the ARK funds. What's Cathie going to do? And after the Workhorse report, she went out and bought more, and then I believe later sold at lower prices. So, the question for a lot of people at that point was, well, does she just have a lot of conviction and something changes, or is this potentially propping up stocks that are seen as Cathie favorites? Workhorse isn't a name I know particularly well, but I think what was very interesting was then this week we've seen additional buying in DNA, which is a company that she already, across several of her funds, owns a significant portion in. She was a PIPE investor. She'd been buying the stock prior to these short reports at prices as high as 12 and 13. And then on the day of the short report, bought about 8 million shares, which I think accounted to near 20% of the volume, and then continued to follow on buy for multiple days after. And so the question I have is this someone who has a really high level of conviction, or is there a more nefarious element to this where, and I don't think this is unique to Cathie, but it's something we've seen ongoing in short reports for years, where people have attempted to prop stocks up in order to have the stock price dictate people's perception of a short report. And as we see the concentration in her ETFs creep up in some of these companies that have been attacked by short sellers, and she continues to sell some of the more liquid names, you get into that dangerous scenario, which people got very concerned about earlier this year and obviously didn't play out, of having large amounts of your fund concentrated in illiquid and potentially problematic companies that, while you have significant inflows, don't represent a large amount of your fund, but eventually can shift to being a very large percentage of your fund as you're forced to sell liquids in order to keep certain stocks propped up. I think it's jury's out on whether this is smart and opportunistic or whether this is propping the fund up. One thing I did find particularly interesting was the behavior we saw after Skillz, which Dan published on, and we noticed just this week or last week that she subsequently exited her position. So Dan, curious to get your take on that.
Well, I find myself in the position where I'm agreeing with Cathie. I think that was a savvy move on her part to finally close out of Skillz. I'm not sure how many people jumped in when she was buying on the dip. I know that, a lot of her loyal following who only does what Aunt Cathie does, were buying. I did the same thing Cathie did, quite frankly. We closed out our position on Skillz too. Only we closed out our short position because, the cost benefit on, what is it, $8 these days? There's just better shorts out there. I have maybe a bit more of a certain cynical view that, yeah, there's a lot of propping up going on, and you're putting it out there. A short report comes out and you're buying shares and you want everybody to pile in, and now you're out. So I think this is not good for the market, and people ought to really realize that Cathie, unlike or like a lot of these passive investment vehicles, and she's arguably less passive, but when she's got money coming in, she's buying. She's rebalancing. She's got money out, going out. She's dumping these things, and you're going to get killed.
Well, on top of what you were saying about money going in and out, I think what's also interesting is when the flows are neutral, that what Freddy was talking about, which is having to sell. And if you just do like a Google search for Cathie Wood buys dip and you go to news, that's how it's being interpreted by the market, not as a continuing buying program. People are recognizing these transactions as buying the dip. And the headlines are saying things like sold Tesla to buy the dip in this. So at the very least, the perception from the financial media and the people observing these transactions is that these are dips being bought. I think there's one clarification that we need to make here, which is that Cathie hasn't actually closed out her entire position in Skillz, but the sentiment of what you're saying is true. She did buy the dip after that report. And if I look, there's actually an amazing website called Cathie's Arc, which tracks all of her positions and all of the buys. And so I'm looking at Skillz right now. And yes, she did buy after Dan's report in March. And then since then, though, she has sold lower. It's not the entire position she hasn't closed out, but she bought the dip at much higher prices and has now sold out some of that position at lower prices.
Yeah, I think if there's going to be like this, radical transparency, then she should come out and talk about why she sold Skillz at the price she sold it. Does she not believe in them anymore? Did she finally read my report? I don't know. We should have that kind of transparency too, because she sure likes to go on television and talk about why she's buying something. Let's hear about why she's selling something.
I mean, look, Dan, to be fair, though, we're not announcing when we exit positions either. So,
well, let's be fair. It's not our business model like it is hers. And I'm not taking in all of this outside money like she is.
I mean, it is our business model to tell people when we're short, and we take in money. I don't know. I don't begrudge her that. I don't think she owes the market an explanation as to why she's selling. I mean, she's presumably selling because she doesn't think it's going to go up. And if you ask her, did you finally read my report? You very well could get the kind of answer that sore loser Jim Oberweis Jr. provided years ago with NQ Mobile, right? Like, he was long this total fraud. Actually, I have some NQ memorabilia. This is a genuine NQ Mobile hard hat. I got it from somebody who used to work there. They actually passed these out to everybody at one point.
Do you still have the gift you sent Jim Oberweis?
Well, no, that went to Jim Oberweis Jr., right? But so Jim Oberweis Jr. is long this thing. We came out the end of 2013. It's a total fraud, this and that. And, this guy actually finds people to pay him for his insights in the form of a newsletter. He's sitting somewhere in kind of rural Illinois. It's like the type of firm where they brag about how many CFAs they have, and which, tells you they have no idea what they're doing, because if that's like your big calling card to professional or to skill, it's no offense to, CFA Institute, but come on. So anyway, he publishes this newsletter saying that they went right over to Beijing and they did their due diligence, and and that Muddy Waters was manipulating the stock and making this up, and so they backed up the truck on this. Jim Oberweis Jr. a year later blows out of NQ Mobile at a much lower price than at which he bought it. I'm sure of that. So Bloomberg contacted him for a quote on his disposal, and he said, well, you can be right, but sometimes you just can't wait to be proven right. And I think he basically stated, or at least implied, that Muddy Waters had, caused this to happen. Like, it was a great company, but for our report, the stock would not be in the gutter. I mean, it's since been delisted, of course.
Yeah, he's still waiting to be right.
Yeah, but I mean, if you had this conversation with Cathie Wood, she'd probably tell you, yeah, you ruined the stock. It's a great company, but it's your fault. That's why I sold.
What we're saying about the trading, I mean, look, do we disclose that we're short? Yes, because we should. But our business model is about radical truth in the report itself, and what we're saying in our findings that you can't find on a Bloomberg terminal. That's the crux of what we do. We disclose that we're short, but we're not putting something out every day like she does. There's a very big difference there. And by the way, we're short. So it's a much more dangerous position to be in, as you can get squeezed, as we have been squeezed when you're giving much more transparency there. It's not we don't have the same model that she does.
What about the idea that it's less about that maybe it isn't about propping up the stock and it's more about validating the work that they have already done? If she believes in her analysts, if she believes in her research, she almost has to buy these dips. If she's not buying the dip, then she's basically saying that we don't know the quality of our work.
Let's be clear. Propping up the stock does not mean manipulation. Okay.
Yeah, that's fair.
If you have a belief that this stock that's $10 is worth $20, you honestly have this belief, you can be out there buying at $10 because you're like, I don't want this thing going to $8. As long as you have this good faith, honestly held belief that it's worth more, than what you're paying for it. That's not manipulation. So propping up the stock has been a mainstay ever since there's been a stock market. So I don't think that, there's, so I just want to be clear, like, it's not to make this accusation that she's doing something illegal or improper. Now, obviously, when you look at the relationship with Bill Huang, that does give rise to other questions. But when it comes to buying dips and propping up the stock, that is not manipulation.
Well, let's move on to some of the other topics we wanted to cover today. It appears as though maybe Evergrande isn't China's Lehman Moment, but it's still a big deal. Freddy, I know you wanted to talk about why it's still important, even if it isn't this big Lehman Moment that the media made it out to be.
Sure. So I think there's two parts to this. First of all, the Lehman Moment actually happened over a pretty long period of time. Okay, we had a Bear Stearns hedge fund go under. We had some money market funds in Europe run into problems, and then eventually we got to Lehman. Everyone's like, "Holy, this is a problem." So
well, and in between that, I mean, there was real illiquidity in the market for these,
right.
For these MBSs. So it, wasn't like, Bear Stearns hedge fund goes under, everything's great. So the Lehman Moment really did drag on for a while. I mean, it started in 2007 and came to its culmination in October 2008.
I would agree. I wasn't under the impression that it was going to be a Lehman Moment. I was wondering whether it was a Bear Stearns Moment.
Right. And so I think that's, a little bit of a problem with the way the media has reported it, because I think everyone was expecting to come in on the Monday. We had a pretty big sell-off, and then by Wednesday it was like, it's not the Lehman Moment. So, markets aren't down like 8% globally. Everything's okay. What I do think is starting to be more appreciated is twofold. Firstly, China has allowed this to happen. This is not the same as the US in terms of the way the political system works. This has been somewhat managed, whether it is because Evergrande's chairman has fallen out of favor, or maybe this is because if she doesn't intend to have term limits, the interest in kind of not being the guy on whose watch that things got really bad and kicking the can down the road, maybe there's slightly less of an incentive if he doesn't plan to leave office ever and says, you know what, if I plan on being here for 30 years, well, I may as well sort this out now before it becomes a much bigger problem in 10 years. But for whatever reason, it does look like they want to delever and they want to address this. Now, whether that results in systematic contagion in the way that we think about it post-Lehman, I think is somewhat irrelevant. We're already seeing credit spreads blow out. But what is interesting is when you look at Chinese GDP and the allocation of real estate and kind of second derivative real estate type industries that touch this, it's north of 30%, which puts you above where Spain was during the Eurozone crisis. So you would have to assume that China is magically going to deflate a real estate bubble that was worse than one that Spain encountered, and in doing so, not have any effect to underlying demand for real estate assets. So if you do deflate the real estate bubble, you're assuming that you can somehow transition your economy from being heavy investment led to consumption led, even though you have all of this household wealth tied up in real estate. The percentage dwarfs anything the US had. So you're going to have hundreds of millions of people who now feel poorer because their real estate is worth less. You have significant amounts of SOEs, local governments who massively rely on land appreciation in order to continue to spend, to put the social net in place. And you think that you can destabilize both of these pieces and maintain growth? And I think that's highly unlikely. And so I think the contagion will potentially be very different from Lehman's, but to think that it's not going to touch commodity markets, China's end demand in terms of its consumption patterns, seems to me to be a little bit optimistic at the moment.
What as well do you think about the idea that this is an indication of where Chinese policy is going around easy money and credit and these types of financial bubbles building up? You could argue that the real estate market, although maybe the most extreme case of this, is not the only place where leverage and easy money has abounded, and that, as you said, they're letting this happen. It's less about this moment and more about what does this signal about Chinese policy moving forward.
I mean, look, I'm sitting here in the U.S. trying to get, another 15% on a second mortgage at about 100 basis points over the first mortgage I paid. I'm not sure I'm in a place to really talk about sensible allocation of capital or what leverage should or shouldn't be on real estate. So I don't have a strong view where we are in the cycle, but I think if this time is slightly different and they don't blink and they do really intend to get leverage somewhat more under control, this could be, this could have some pretty significant implications on Chinese growth, which by default is something that the rest of the world, I think, will feel, whether it's luxury goods, whether it's commodity markets, whether it's multinationals exporting other widgets. I think to sit here and think that this is something that will be contained to China is unlikely.
It feels like we've seen this movie a number of times before, going back even to the relatively early days of Hu Jintao's leadership of China. Every time to date, every time that the Chinese leadership has tried to dial back the leverage and to try to kind of let air out of bubbles, once they've started that, they've looked into the abyss and they've thought, oh, fuck this. We don't want to deal with this right now. And they've kicked the can down the road, and this is obviously a behavior that is not unique to China. But they haven't had the political will to actually see through letting air or deflating, bursting any of the bubbles. And in 2015, with Xi in power, they basically tried to novate the real estate bubble into an equity bubble. But they kind of forgot that one of the beauties of real estate bubble that you don't get with equities is that you don't get daily marks on your real estate holding. And it's all very subjective, whereas with the equities, you do. And once they started falling apart, they resorted to pretty extreme measures to try to stabilize the equity market. And then once again, we kind of forgot about, trying to curb leverage and speculation. So I don't know really how far they're going to take it this time. And when you look at it this way, so you have the Communist Party, and it's obviously a totalitarian government. So if things really start to get bad, can it blame anybody else? Can it deflect the blame, or can it distract from this? Now, if it were going to deflect the blame, I guess it could say COVID, maybe hostile West, although that doesn't ring true. But COVID also kind of comes back, and sits with the party as well. So do they distract? Well, how do you distract? I know we want to talk about China and Taiwan. Is this how you distract? do you get, I mean, the saber rattling is maybe already starting, but, the saber rattling has started, but is that a prelude to making a move against Taiwan, particularly at a moment when the West hasn't yet coalesced around a strategy for deterring aggression from Beijing? So that's what I think is really, if China is, if the CCP and Xi are going to keep their nerve and see this through and pop these bubbles, they're going to have to do something radical elsewhere to distract and deflect, because this will, the pain of the real estate market crumbling will be so broad-based at this point in China that, the CCP is obsessed with stability. So I don't know how they can maintain stability if they're really going to go through with this, which makes me think they're not really going to see it through. But if they do, what do they then do?
Well, what about the argument that this is necessary? The income to, price ratios in China are worse than anywhere else in the world. It is a stability issue in terms of housing affordability, and real estate has gotten to a point that actually letting this bubble keep going is a social issue for them also.
Well, sure. Okay. But China has always had this out of whack Gini coefficient, measure of inequality. Now, I think one of the great lies that China's government has told its citizens and that the rest of the world has believed for a number of decades is that the biggest concern of the CCP in terms of stability is fear of a peasant uprising. I do not believe that. I think what the CCP has always been afraid of is well-educated, middle-class and higher urbanites revolting, because they have some real ambitions. I mean, if you look out in the countryside, you will literally have families that have been on the same plot of land for over 20 generations. Like, they don't really have ambition. It's just, don't dispossess me of my land and screw me on the compensation. Like, that's really the level that, the expectation for the CCP in dealing with, with the peasants. But with the urbanites, they have ambitions, hope for the future, and they have an idea of how the levers of power work. So I think that's what the CCP is really afraid of. And yes, that becomes the problem. I mean, you've got these two forces, and you have the same tension in our society and probably a lot of other Western societies, where if you already own property, you've done really well and you're on paper very wealthy. But if you're young and early in your career and you want to become a property owner, well, you're screwed. And just in any society, there's no easy answer for this, especially when we live in a world where you have to keep real rates, near or below zero, just in order to kind of keep the economies above stall speed. But I don't know, if I had to weigh these, who's got more power? How many more people are there? Who's more influential? I worry more about the people who already have real estate and would be much less wealthy than I do the people who are just trying to start their climb. I think this is a bigger deal than this.
I would tend to agree that in China specifically that I've looked at, political ignorance is their power base. You're going to find that from the lower income. You're going to find that from the peasant class, if that's what you want to call it. You look at the cleansing that they did in the 50s. I mean, it wasn't on the peasants. It was on the educated that they sent to be peasants. And so I do agree. And on Taiwan, look, I'm just going to say it now. I've said it, many times on my podcast. It's gone. I hope that it's not going to be as violent as it can be in Connecticut, but it's going to go the way of Hong Kong, and there's not much we can really do about it. I would like to see us coalesce around a real political price to pay for China, but we're not going to go lose a couple aircraft carriers defending Taiwan. It's not happening.
Well, okay, let me push back on that though, because what does a world post China taking Taiwan by force look like? China would control the IP and much of the production of the most sophisticated semiconductors on Earth. Okay, that's a huge blow to the American way of life.
And a huge win for them.
Well, not only is it a win for them, this massively this will have real world ramifications in America for generations. I mean, you think it was bad when a lot of our manufacturing base for low end shit went to China. Well, how about us being completely dependent on China for advanced technology? So I don't know that that's acceptable, number one. Number two, if Taiwan goes, the US in Asia, our alliances are dead, because all of the countries there who were frustrated by our distractions in the Middle East, they were waiting for some attention when the Obama administration tried to pivot to Asia, but was never able to get away from focusing on the Middle East. They've been most of them bullied by China, and they're afraid to take a stand. And the only backbone, and I don't know if this is so much of a factor for Japan, but if you move down, beginning with Taiwan, down to the Philippines, Vietnam, etc. Singapore, if we cannot defend Taiwan, especially if we're not even willing to defend Taiwan, all of those countries are going to do what is the smart thing and say, you know what, United States, we're under these guys' thumb, but we're going to embrace that. And whatever China wants from that, from those relationships vis-a-vis the US, China will get. So we could be losing bases. Look, from a strategic perspective, I think this would be a massive, massive defeat to the US. So maybe there isn't popular support to defend Taiwan. And maybe that's the less bad outcome, is letting these things happen. But, here and now, if that happened, and if China took Taiwan, and especially if we weren't there to even try to push back, my kids are looking at a very different world, I think, in many respects as Americans than they would be otherwise.
Well, look, let me just respond, because you said a lot there, and it's all true. That those outcomes are arguably a fact if they did take Taiwan, but our acceptable outcome isn't necessarily their concern. And their concern are all of the benefits that you talked about that they would have in having Taiwan. You remember when I had a debate at the CSIS, Center for Strategic International Studies, on Huawei. And, after that debate, when we're talking to the Five Eyes and everybody else, it's all about the semiconductor industry and the microchips. No, our problem is not with Huawei's employees. Our problem is, and the reason we're here is our governments are completely incompatible on a national security level. And Huawei can be co-opted by the PRC government at any time. We all agree on that. They can be co-opted by the PRC government at any time. And any person in China, even running a company like Huawei, who values their freedom and their life, will do whatever the government tells them to do. But let's call it like it is. This is our relationship. We spy on each other. We don't have a good relationship. And I don't care. The best piece of wonderful chocolate cake at Mar-a-Lago is not going to change that. This is really the last leg for them to get up on it. They've already won in AI. You've been reading that in the news. Whether you believe it or not, you have to believe that they're very advanced where AI is concerned. Where they're behind is semiconductors, microchips. That is a problem solved with Taiwan. And I will say this about President Xi. Say what you want about him, and I do. When he says something, he does it. And he has said over and over again, we're taking Taiwan.
Hope of all Chinese people. If China can be unified, all Chinese will enjoy a happy life. If China can't unify, everyone will suffer.
Peacefully, that would be great. By force, that's going to happen too, if it's not going to be peacefully. And you're saying that Europe and the United States and the rest of the world who haven't gotten along on any issue, small to medium, are going to like just come together on this one. That'd be great. If Taiwan can hold them off for a substantive period of time, weeks, months, I agree. People will get behind it. But if it happens very, very quickly, it will be over.
Well, I don't know that it'll happen quickly. All right. Like, I think
I don't either.
Conventional wisdom in this area is that it's still difficult to capture and subdue Taiwan. Still difficult for China to do that. But, the question I have, and I don't disagree. I don't think the Europeans would do anything post China taking Taiwan by force. I mean, they'd grumble and, pass their resolutions, but at the end of the day, they're not going to take a stand. I mean, they haven't taken much of a stand on the continent when they've been shown the evidence that Huawei basically opens up their vital communication networks to Chinese espionage. And the other factor is the alliance between China and Russia. I mean, Russia's like messing with Nord Stream, right now, the gas flows there. So, I mean, frankly, if you're sitting there in Germany, it's hard to bite that hand that feeds you as well. So,
and Carson, you have to consider that any conflict that draws us into Taiwan, that Russia will take advantage, and they will open up a front in Europe. And what are we going to do? You don't think so?
I mean, they're not going to invade Europe. I mean, is that what you're saying?
You mean like Ukraine? They're not going to invade Ukraine?
Well, what about Russia as the playbook for what they're doing with Europe? China is not energy independent. They're not food independent. There are things that the rest of the world has that China needs. Now, if Carson, what you're saying is true about the upper class being really the group that they need to worry most about, high food prices, high energy prices doesn't really concern them because those people are price insensitive, at least in those areas, unless you talk about some really serious rises. But if the rest of the populace actually is a problem for them and is a worry in terms of their ability to maintain control, those two areas of energy and food seem to be the levers that the rest of the world could pull.
Well, but would the rest of the world do it? Number one.
That is the question.
I doubt Europe would do anything, but that also gets to the point as to why China, if you're thinking, well, why does China care so much about Taiwan? Is it just this face thing? Well, if you think about China's coast, its only coastline, the Pacific, if you stood in Shanghai and looked out, you would see that you're surrounded by U.S. military power from South Korea all the way down past your Pacific coastline. And Taiwan is right in the middle of this. And we don't have much in the way of military power there. I think we've got about 24 troops right now this was just reported. But we obviously arm the Taiwanese. And certainly in a conflict, we would expect to be able to base assets there in Taiwan. So Taiwan's right in the middle of this blockade line if you're China and you're looking out. And that strategically is the problem for China because it's not independent in terms of energy and food. And that is the reason why China would move on Taiwan.
So if China were to move on Taiwan, where is it going to pop up in the way markets are pricing assets?
I think it already has.
Is it going to affect Chinese? Okay.
Well,
look, I think, when you look at the companies that are being called back to China, you think it's all about the Holding Foreign Companies Accountable Act.
No.
I mean, imagine what happens to these companies if they are on a foreign market and there becomes a kinetic conflict of some kind in Taiwan. And now they're all being pulled back to Hong Kong, which is basically China now. We can agree that market's controlled by China. So the biggest companies are either dual listed or coming back, and that's not a good sign because Max is right. You have to think what would happen if there was some kind of conflict to anybody who's just solely dependent on a foreign market for a share price.
But it would be so much more widespread than that. And maybe the biggest wild card there when you think about the financial markets and the knock-on effects is whether the U.S. would engage militarily. Because there's been this this fear that if we ever did have a shooting war with China, that China would take its treasuries and its other U.S. dollar securities and just dump them and try to destroy the dollar. But of course, that would create problems for China too. It's sort of like it's the financial version of a nuclear war. I'm not sure anybody wins in that situation, but
their reserves are in dollars too. It doesn't.
Yeah, exactly. Then I don't know. I've heard people say, well, maybe we would just cancel all of the treasury securities that China owns, and then the other side says, oh, that would hurt the U.S.'s credit rating. But then, I don't know, would it really?
What are we talking about? $800 billion? See, the $30 trillion we have in debt, we owe ourselves, not China.
Yeah, but I mean, how much can that treasury market sustain? And like, if you came in and tried to smack bids, with 300 billion size, or you're dumping the dollar in that size, I mean, there would be tremendous dislocations in financial markets.
But what if the Fed just steps in and monetizes it all? As Dan said, we already owe it all to ourselves. Couldn't the Fed step in, create a special vehicle, just take it all up?
How quickly? I mean, it's not like we're going to get a declaration of financial war, like sent to us, like ahead of time. I mean, there would be doing that again. Like, that's not necessarily the best thing for China to do.
Oh, it's arguably worse for them. But again, it's only $800 billion.
But should they remain dependent on our ability to repay, our willingness to repay our debt to them if we were in a kinetic war? So I don't know. Like, none of these scenarios are good scenarios. But if you're China, I mean, look at the timing of what China did with Hong Kong. Obviously, there was a desire to basically eliminate the two systems for a long time. I mean, I'm sure that was always the plan anyway. But weren't able to really get away with it until COVID happened. And COVID, that old saying, never let a good crisis go to waste. COVID was useful in this regard because the US, UK, everybody else, we were so distracted. We're, so much infighting as well. That's the time to move against Hong Kong. Now, we still have that dynamic. And again, we've just pulled out of Afghanistan. We're still, we've had a transition of administrations in the past year. We don't have, I don't think, a coherent policy or agreed upon policy as to how far we're willing to go with Taiwan, especially when you look at a U.S. populace that's war weary, that has, where we've got all this internal strife. This is a good time to do it. I mean, I don't know that you get a better opportunity to do it if you're China.
Well, Carson and I agree. There you go.
So this is the breakdown. Dan, you're on the other side?
No, look. I mean, I think what Carson just recently said, in the last couple of minutes is, yeah, the timing is lining up, and I don't think the rhetoric out of Beijing has been this reunification is far off in the distant future. I think we're talking the next term.
Well, to be fair, I mean, the Chinese government has been, ever since 1949, saying that we're going to reunify with Taiwan.
Yeah, with a lot less capability.
There was a status quo. Nobody thought that China would really challenge the status quo militarily.
Well, they were going to go over there in a rickshaw in 1949. They're a little more capable.
Yeah, it was a little the South will rise again back then. But now there's actual potential for this to happen.
There's real potential. I'm not saying that it's my base case or I think it's probable. But if we go back to this question about how far is China really intending to go in terms of rebalancing its economy and starting by bursting bubbles, as I said, they would need a distraction or something to keep support, keep the people support of the CCP. And like, a war is usually a pretty good way to do it, at least, years 1 through blah. If they're still at it 20 years later, I'm sure that won't be the case.
All right, well, gentlemen, I don't think we are going to solve this incredibly huge issue at this moment in time. I'd like to thank you all, and thank you to Freddy, who had to drop off. I'm looking forward to doing this again soon.
All right. Thanks, Max.
Thanks, Max.